And we continue with bearish pound. We can see that on the weekly chart here, we had a small candle last week. British pound was the only currency among the major currencies which depreciated against the weak greenback last week. It happened as the concerns about the future of the UK economy after the Brexit vote have intensified. We heard comments from the British Foreign Secretary Boris Johnson that the UK will start the procedures of separating from the European Union at the beginning of 2017. There is also news that Michel Barnier, the European Commission's chief Brexit negotiator, will begin work next Saturday. And we can see that this process of Britain getting out of the EU is getting set in motion. So uncertainty for the future of British economy is once again driving the currency market. Of course, so far the economic figures out of the UK were rather positive, but traders and analysts fear that this may change, and there are expectations that the Bank of England will still decrease the interest rate, will ease monetary policy in November. So we can see that this lower border of the trading range within which GBP USD has been trading since Brexit will be vulnerable for bears. There are many economists among the major investment banks which gave us the targets for GBP USD around 1.25, 1.22. So if we have the break below this lower level, then the move will be of the magnitude which is roughly equal to the this range. So the levels of 1.25, 1.22 look rather natural, look logical. Still, British pound is trading at the multi-year lows, and this provides support for this pair. If we look at the chart, we can see that GBP USD is testing to the downside, the line which has been drawn through July and August minimums. Lower minimum in this case will be a bearish signal, and below 1.29 we'll be looking at 1.2876. This is the weekly pivot support number 1, and 1.2790. This is the weekly pivot support number 2, and also this is the post-Brexit minimum of this pair. I remind you that this pivot point indicator is a very valuable tool for the weekly analysis of the currency pair. Here we have this light blue level at 1.2998. Roughly we can say that it is at 1.30, which is the key psychological level for British pound US dollar. And as long as we trade below this level, it means that the outlook for the currency is bearish, and that it will likely test this dark blue support lines I have mentioned. Also pay attention to the fact that some analysts say that the outlook for British pound will remain bearish as long as we have resistance at 1.34, 1.35 in place as long as the pair is trading below this level. So even if there is an increase in British pound, which at this point looks not very likely, these will be levels to sell the British currency. If we look at this candle of the last week, it has a small body. This means that it was hard for the sellers to make British pound get lower. It means that British pound has some support. There are buyers at this level, and there is chance that we'll see some recovery of British pound to levels around 1.3229. If we have this chart if we have this 4-hour chart, junior time frame, we can see that the current move to 1.2924 is not supported by MACD indicator. Here we have some small divergence, and I believe that we should wait for levels around 1.30 to open new short positions on British pound. However, here at the 4-hour chart, we can see that the 50 period moving average went below, firstly, 100 period moving average, and secondly, 200 period moving average. And this looks like the beginning of bearish trend. So, in my opinion, British pound should go and test the mentioned support levels of 1.2790 in maybe by the end of the week or in the next week. So in my opinion, if we don't look at what is happening with the US dollar and the broad trends of the US dollar, British pound looks vulnerable for the downside. We saw already last week that GBP USD can decline even if US dollar is weak versus other currencies. So here we can see an exception if the US dollar declines. Increase above 1.30 will make us look for a correction to the upside, and as I've already said, there are resistance levels around 1.3080 and 1.32 where we will look for new short positions and the reversal to the downside.